going live right now. And now we are going to hit the record button for Spotify, which will probably be live tomorrow or by Monday. So three, two. Welcome to another episode of Million Dollar Stories, where we get to interview authors from all over the world. And I think that everybody that I interview gives a little bit of some insight on things that you can take and apply to your business and make better decisions and grow that business or dream business of yours. And people don't like to think of accounting or, numbers because it might be dry, it might be boring, but oh my God, it can give you a clear picture of where you're at, where you were, and actually where you are going. So we have an expert here who has a book called Intermediate Accounting, has 411 reviews. It looks like a 4.4 review rating overall, which is phenomenal for an accounting book. And the man himself, Terry Warfield, is here with us. So thanks so much for joining us, sir.
Thank you, Mike. Glad to be here.
Well, let's start off with the genesis of this book. I'm assuming you have many years in the game, and maybe that's why you figured to take your thoughts, put it down on a piece of paper, and either give it to your potential clients or just to serve the many. So,
Yeah, well,
where did it all begin?
yeah, thanks for that. I actually became an co-author on this book in the 10th edition. The book, the current edition out is the 18th edition. So this book was originally published back in the mid 70s.
Wow.
And it's a pretty big book. It's 24 chapters. It's a textbook that it's pretty popular standard adoption for the two core intermediate accounting courses that are in all accounting curricula. And so it covers the whole range of key topics in accounting, beginning with the financial statements. And it's kind of a walk through the balance sheet, cash and receivables, property, plant, and equipment, intangible assets, debt, equity, stock-based compensation, pension. So it's really designed to give all accounting students that graduate from accounting program to get the fundamental core elements of financial accounting. I think the other thing, those students and most accounting programs produce graduates who are on track to become a CPA, a certified public accountant. And that involves passing an exam, a CPA exam. And our book has got a pretty strong, long tradition of being the book that really helps them prepare for the financial accounting part of that exam. So that's kind of where we're coming from.
Well, in school, I went to Duquesne University here in
Uh-huh.
Pittsburgh, Pennsylvania. I was a finance major, and I had to
Yep.
take accounting two. I will tell
Yes.
you, accounting two destroyed me. There were two reasons for that, but it was the once a week course,
Yeah.
right? So it wasn't throughout the week, so it was all at one time. And I was totally infatuated with a girl at the time. So my mind was totally distracted, and I did poorly. I believe I got a D in the course. Now, I was never really a numbers guy.
Yeah.
However, the more I become entrepreneurial, I find myself just being drawn to seeing how numbers paint a picture. So
Yep.
I had to become a business owner for the numbers to really mean something for me. And I'm assuming maybe that's a common ingredient that people don't care about them unless it affects their bank account. So, how did you fall in love with accounting in general? And is it something that you're seeing out there that people kind of negate it until it actually comes back to bite them?
Yeah, that's a good question. And my background, a lot of people think that I'm a CPA and I've been an accountant for my whole life. Well, no, I actually was a finance major myself as an undergraduate.
Nice.
I went to work in a bank and for several years and ended up preparing the financial statements in a bank. It was in that job that I realized the importance of accounting and how valuable that is for a company. And so I kind of found accounting by virtue of working within a company and thinking about how the company is going to provide information to its deposit holders, to investors, so on and so forth. So I think for a lot of people, like our book, the book that we're talking about, Intermediate Accounting, that's a book that's used by all accounting majors. All right. But the finance majors do take intermediate one. So they'll take at least one semester like you did. And some, by doing that, they don't have a girlfriend maybe, and so they don't get distracted. Some, by going down that path, they realize, well, yeah, it is important to know a little bit more about accounting. And so what we've been trying to do is actually here at Wisconsin is really trying to encourage finance students to take a little bit more accounting than they're required to. And that's what the employers tell us that they need. So I think there is that evolution.
Hmm. Yeah, I think it's
Now,
yeah, go ahead.
let me just finish the thought. And I'm working with a couple of startups right now, and I'm on a couple of not-for-profit boards. Um, Increasingly, and it's an easy sell, when an entrepreneur starts thinking about advancing a business plan and thinking about how they're going to be successful and to get a startup off the ground, what they learn quickly is that the importance of accounting information. It helps them make decisions internally to the business, right? Because you got to keep track of sales and cash and all those things. Secondly, entrepreneurs need to attract capital, right? And so when I mean they need to borrow money, they may need to entice people to invest by their stock. Well, investors are not going to advance you money unless they have information about your business and how it's going to grow, how it's going to generate profits. And that information is accounting information. And so entrepreneurs that at least they need some foundational knowledge of accounting, but to the extent that they can kind of get up the ramp a little bit with their accounting knowledge, they'll be better able to tell their story to investors and creditors, and then be able to attract money to their companies.
I like it. Yep. And before we hit the record button, you did mention how everybody has this idea that accounting and taxes are pretty much one and the same, or that's the only
Yeah.
reason why you do it. And I met with a guy named Tyler McBroom. He may be watching right now. He may be watching later or listening later, but he basically outlined, what I need to do prior to meeting with my accountant and when to meet with my accountant. And what you're really trying to do is make it as easy as possible for them to guide you in the right direction. And if you're a mess, you're going to make the accountant's life a mess. And
Right.
therefore, it's just going to be a lot of confusion, and you will not have a clear direction on how to invest your money, what you're doing right, what you're doing wrong. And it really started to clear things up. I will say that accounting, I don't know if you could ever get dialed in 100% the perfect way. It's a constant evolution, especially as an entrepreneur. So I don't know what you see out there, but it takes a long time to get perfectly refined the way you want it. Is that right?
Well, yeah, and I think that's one of the dimensions of accounting as a discipline. It's an organized structure of keeping track of things, right? And so that provides the discipline around how you process information, keep track of transactions and the impact of transactions on different parts of the financial statements. So that's the start. And again, the tax part of that is people need to remember now. People think about their individual taxes, but for a company, when a company prepares a tax return, the top line on the tax return is the net income that they computed applying accounting principles. So the tax return starts with accounting net income. And then there's a bunch of adjustments that are made to it, right? So, and that's what tax accountants really bring to the table is that they have a pretty deep knowledge of the tax code and understand how the tax requirements differ from the requirements we have about preparing financial statements. That's what students learn when they take that class with my textbook.
Got it. And are you a CPA, certified
I'm
public
not.
accountant? Okay.
I'm not a CPA. I never worked in a position where I was preparing financial statements for the public. But and so only if you're going to do accounting work for other people as a public accountant, do you have to have a CPA. So
Got it.
I've never been in that position.
And so what's the difference between an accountant for a major company like a bank as compared
Mhm.
to just say an entrepreneur who has a business? What's the difference there?
Well, with the entrepreneur, because of the scale, right? Many entrepreneurs start out and they do a lot of the accounting themselves, or they'll use software package like QuickBooks or something that to keep track of their transactions, et cetera. Now, it won't be long before they get to the scope or the scale where they may have to hire a staff person that's doing the accounting part of the business. In a corporation like the bank I worked in, we had 4 people that were doing the accounting reports, and that involved both processing transactions and then preparing financial statements off of that. Fortune 500 company, they'll have hundreds of people involved in preparing the financial statements, and again, not just the financial statements, the basic financial statements, but also being on track to prepare reports for the tax authorities.
Gotcha. And I'm sure you've been around, people ask you, I guarantee if somebody in the family has a question, they always think of you, right? They're like, hey, better run it by him. Is that something that we do or we don't do? Or so is there something that you're noticing amongst maybe us entrepreneurs that we're doing very wrong that you would like for us to, or you like to see us correct, whether you have automation, a check-in with your books every week. I know that I'm trying to do weekly check-ins on my bookkeeping, and that was something that I was doing once a quarter, and now I broke it down to once a month. So it's almost like I keep wanting to just get a little bit more dialed in from day to day. So like, what's my accounts receivables? Well, technically, I might not know for a week and a half. There might be a two-week delay. I'm trying to get that down to a daily snapshot. So is that the biggest mistake?
So Mike, let's think about it this way. There's 3 primary financial statements that accountants prepare, right? So the first is the income statement. That the income statement's measuring your revenues and expenses, and you kind of deduct the expenses from the revenue you get in net income. The second one is the balance sheet. The balance sheet is going to capture the assets you own, the liabilities that you are obligated to pay, and then equity part. That's kind of the net of those 2. So those are fundamental. Every business from small to large is going to prepare those 2 financial statements. The third key statement is the statement of cash flows. And what it does is it captures the flow of cash, that some of it is going through the income statement, some of it lands in the balance sheet. For an entrepreneur, they have to be highly focused on cash flow, right? Because
cash flow is king. I live by it. I like that phrase.
Bills have to be paid. Bills have to be paid. Those are kind of the immediate demands. But cash flow then still maps into the income statement. It's going to map into the balance sheet. So a weekly check in on what's your profitability, in other words, the income statement, keeping track of your balance sheet on a periodic basis, and watching your cash. And so that's a should be a high point of emphasis for entrepreneurs.
And so do you see maybe, and this is something you might recommend for anybody out there listening, do you recommend having maybe like a virtual assistant or somebody to just kind of organize it in an Excel sheet, or QuickBooks Online? I think that's the one that everybody's kind of talking.
QuickBooks is very, very common, and that's a nice, it gives you the organizing structure. I think, and I don't know what the resources are, there's a lot of, it's worthwhile for entrepreneurs to at least explore a relationship with a CPA. If for no other reason, take a crack at what you do on your own, but then use them as a sounding board with respect to how they're doing it. CPAs, and there are a lot of CPAs that serve primarily small clients, and what they'll do is they'll do 2 things for you. There'll be a check on the accounting systems that you're putting in place and the way you're keeping track of things. The second thing they'll do, at some juncture, you are going to have to prepare a tax return. And so the CPA can be a very valuable resource with respect to that the first time you got to file a tax return. And the tax code is complex. And for entrepreneurs, actually the tax side of accounting may be one of the more important things that you'll think about, because the taxes and managing taxes for an entrepreneur is really important because, right, if you've got to pay tax, that's cash. And so that's part of the management process.
What do you love most about it? And maybe even in regards to the book, was there anything that you found
Oh,
more fascinating? I just think everybody who writes a book, number one, understands it at a higher level, but maybe falls in love with an aspect of the business that may not have been something that they have loved in the past. So,
well, what we try to do, and I think our book has been very successful. I think I don't know, we have more than half of the market adopts our book. So it's a pretty popular book. And I think that one of the elements of the book that is appealing to instructors, because remember, students buy books, right? But instructors adopt the book to use in their class. So that's a very interesting thing, right? We want the book to help the students learn accounting. So, but we have to convince instructors that our book is a good one to use when they're teaching intermediate accounting. And so what we've tried to do, and this has evolved and I think gotten better over time, with each of the topics that we teach, we start out with a conceptual discussion about why information about that topic is important for an investor or creditor. So that's how we start out. And that's an overarching theme with respect to any discussion of accounting. Accounting is information to make decisions. And financial accounting, my book's about financial accounting. It's about information that you're going to provide to investors and creditors to make investment decisions. So for example, when our chapter on leases, lease accounting, which is a fairly complex topic. Well, we spend the first 4 or 5 pages of the chapter kind of giving a high level overview of what a lease is. You know, why do companies use leases? Leasing is a form of borrowing, right? It's a way to get assets. And then once we give students a kind of a foundational understanding of what a lease is, why companies use leases, we said, well, now if you were investor and creditor and a company's leasing their assets, what information would you want to be able to evaluate that company? And then we take them through the accounting rules for leases. When a company enters into a lease, they've got to record a leased asset and they've got to record a liability that represents what they're going to owe to pay for the asset through the lease. So therein lies, and with every topic in the book, we try to help students understand the economic substance of the thing they're accounting for, and then why accounting information is important for decision makers.
I would think most entrepreneurs or just business owners in general have fallen in love with their product or their service, and this comes last almost. It's like, do I have enough money for whatever this month? Okay, good. It's pretty wild how, you know, many entrepreneurs really want to help people or grow their business, and then, you know, the money aspect is sort of like, all right, what do we do this month, right? It's like it's almost like a lagging indicator, and that's probably the best way to put it, is that when you see those numbers, the dollars in the bank, it's a lagging indicator, and therefore, what is something that you need to fix? It's not the dollars in the bank or on what's on the page. It's potentially the sales calls, the marketing aspect, things that you don't see on the accounting page, and maybe that is something you share with your students or potential
well, you
clients.
do. And Mike, in that regard, now the example I gave about our book, and again, that it's targeted at a certain audience, right? Now, for an entrepreneur, the accounting information is more important for decision making by the entrepreneur. So what you just described, right, is an entrepreneur needs to have that accounting information flowing through their financial statements so they can see how they did last month. How many products did we sell? What did it cost us to sell those products? And by the way, the sales calls, that expense would be in there, right? So you keep track of the sales calls. So it is kind of a look back process for many entrepreneurs because they need to know how well did I do last month or last quarter. Importantly, though, and this is what we try to teach our students in a different class in our curriculum, is you use that historical information, though, as a foundation to do some predictions or projections in the future, right? So let's say you look at a income statement over 4 quarters and you kind of can see a trend in the sales, right? Well, then you kind of say, okay, what am I going to need in the next 2 quarters, right? Well, it's a common process to kind of do a projection, kind of have a growth rate built in, and you kind of see where your revenues are going to go, where the expenses will follow those revenues. And that's what the accounting system does. It allows you to assess how you've done, and it provides a basis for predict where you're going to go. And actually, it could identify some places where, oh, we're gonna if our sales continue to grow over the next 4 quarters, let's say, well, I might need to buy some more equipment, right? So that's an investment decision that will help you then make an plan for that investment decision.
How do you decipher what something costs if it's really tough to break it down and basically see how much labor costs to do
Yeah,
X amount of calls or to create that widget? I think that was my hardest part of really
yeah,
breaking down what is the cost of goods sold. I think that's
yeah,
probably the
yeah.
best way. Is that something you help people understand? And maybe there's a mathematical equation that you
Well,
can share?
there's a discipline around that. I mean, there's a well accepted framework for doing that. So let me step back. All right. So we've talked mostly about financial accounting, that's reporting to external parties. We've talked about tax accounting. All right. The third important accounting discipline is managerial accounting, right? So that's accounting that's relevant to decision making by the management, internal accounting, right? And that's where measurement of things like cost of goods sold or product costs, that's where students in an accounting program learn that. And so there's a standard accepted way to say, well, if I want to get the all-in costs of a product, right? How do I do that? Well, you'll have the materials, you'll have the labor, you have to kind of have some way to attach labor to whatever it took to produce it. You'll have some equipment that's used maybe. So you'll have some element of the equipment costs that'll load into that. So if you want all in costs of your product, it's going to capture the materials, the labor, and the equipment, and we call that overhead. So there's a pretty, there's another book for that. My book doesn't do managerial accounting, but there's an accepted discipline around how to do that.
And opportunity cost is a part of managerial accounting,
Yeah,
right?
that'll come into it. You'll be able to assess opportunity costs when you do that kind of measurement.
Yeah, I think that is another thing where the more I understand my numbers, and I think that's probably the message that is the greatest takeaway. If you know your numbers, you know yourself, and therefore you know where you belong, what to do next, where you need to focus on. And it's wild how the more success that you achieve, you start to say no to things. And I just saw this great quote that the smarter and more successful you become, the more you say no to opportunities.
Well,
And
yeah,
I kind of find that
absolutely.
fascinating how there's a dichotomy. In the beginning, you say yes to everything. And then as time goes on, you know your numbers, you could see the
Yep.
picture, and then you begin to say no to many opportunities because you know the cost is
Well,
associated.
remember what your financial statements should provide to you over time is the profitability of different things you do, right? And to do anything, you have to make an investment. It could be time, it could be investing in equipment or buying inventory, whatever that might be. Well, by having accounting information about those activities that you may do, then you can begin to evaluate, well, if I invest in something new, that means I have less to invest in something I've been doing. And the thing I've been doing has been very profitable. So I have to be very careful that if I'm going to take something on, right? And that is the definition of opportunity cost, right? If you take something on, something else is going to be sacrificed. And that's how you're able to make those informed decisions.
You said this book came out in the 70s.
The first
Could
edition did, right?
Yeah. So give me the quick little rundown on maybe how the accounting world has changed since then, or even since the 90s. I am so thankful to grow up in a time period where there's automation and we have
Yeah,
QuickBooks
yeah,
Online, not just
yeah.
QuickBooks, but having all these tools and resources probably making the business world or accounting world a little bit more refined, but the accounting principles never change. So, what have you seen?
Well, they don't. The principles do not change, and the way that we process transactions and then incorporate them into financial statements, that has not changed. The biggest change in accounting is the evolution and innovation of activities that companies enter into that we may not have had rules for. So, for example, I talked earlier about lease accounting. 30 years ago, the use of leases were not nearly as prevalent as they are today. And so I think in that first edition of intermediate accounting, I don't think there was a chapter on leases. Secondly, the second area, big area, is intangible assets. 35 years ago, when the first edition was published, or 35, I guess more than that, 45, the amount of value on a company's balance sheet that was tangible was a very high level. Companies were primarily comprised of hard assets, equipment, property, right? Today, there's so much value of a company that's not tangible.
Like a personal brand, the value of a
A
personal brand.
brand, a
Yes.
trademark, a patent, you bought another company and you paid more than the value of the assets. That's called goodwill. So that's probably the biggest innovation. And it's not in accounting, but it's in the things we account for, right? There's more things that are not tangible. They're hard to measure. They require estimates. And that's been a challenge. And the standard setters are wrestling with that all the time.
Ooh,
The
man,
second thing,
yeah.
the second thing is technology and how technology really has had a big impact on accounting processing. So when I started in accounting, would be in the early 1980s. There were a lot of the accounting systems that I was working in the bank with, the bank I worked in, which was a $130 million bank, so a decent size. We did a lot of the accounting records were on paper and pencil. The journals were, today, everything is electronic. Everything is QuickBooks on steroids. And so that's been a big innovation. And so much less time of a practicing accountant is on the processing of transactions in kind of a manual way to now just entering information into a computer program and it does the processing within the accounting system.
Now, I know that we've been talking about it quite a bit within our $1 Million Circle, the Facebook group. But when it comes to, let's just say, and you're in Wisconsin, I'd love to hear your viewpoints on this. But the crazy case that just happened in New York City with Trump and the judge and the evaluation of properties, do accountants look at that and shake their heads of like, wow, when you're talking about intangible assets and potentially just real estate valuation, you have a judge that's saying he knows more than accountants do. So what are your thoughts on what just happened? I'd love to hear what your perspective is.
Well, two things there. Mr. Trump, former President Trump, had a CPA, right? So he had a CPA involved. And that CPA did not live up to the standards of a certified public accountant. All right, right. That CPA did not follow the rules of the road with respect to preparing financial statements. So there's a well-maintained framework for establishing values that you're going to report to secure a loan or to get an insurance policy, right? And the key to those valuation principles, and those are used in accounting all the time, is that they need to be unbiased, right? And so here's what I think part of what happened there, and this is Mr. Trump, President Trump was not the first one to do this. Companies tend to like to overvalue things when they're borrowing money.
You mean
right?
always? All
Yeah,
companies do?
right,
Yeah, probably, right?
Right. And that's what the Trump organization did. And it was well documented. And they did not follow the rules of accounting with respect to establishing valuations on your financial statements that you're going to use to secure a loan. And then what do you think they do when they're insuring a property? Well, then they tend to undervalue. So the challenge there is when you're trying to get insurance, right? You like to undervalue. When you try to get a loan, you want to overvalue. That's not consistent, right? Neither of those values are right, or we'd call that bias. And they're not objective. So that's really what President Trump and his companies ran up against.
Gotcha. However, it's something that everybody does. So this does come into when do accountants look at that and say, well, I've seen that before. The bank that I work for potentially has done that. So it doesn't.
Yeah, you're right. So, but that doesn't make it right. And here's the deal. And this is one thing that we try to instill in all of our students here, the accountant students for sure, and even other business students, is that the markets, the robustness of our capital markets depend on people having trust in the information that's presented to them, right? When they make a loan or when they buy a share of stock. And so if we allow, and that's why this court case is so important, that there are consequences for misrepresenting or providing biased information. Because if we do not enforce good, honest, unbiased accounting, right, then before long, nobody's going to want to invest in companies. They won't trust anybody. And so we try to instill that in the students that go through our accounting program and can become CPAs, that they have a duty to the public to make sure that we're upholding the integrity of our capital markets. And that requires unbiased information, accounting information being provided to people in the markets.
Extremely difficult for intangible assets, right?
It's hard.
Because
It's
so
hard.
you have 5 different experts. They all say a different price. Who
Well,
do you choose?
but again, here's the misunderstood part of that, right? Accounting and accounting information is more than just the numbers that are on the financial statements. So I think you know this, right? The financial statements are made up of the accounting statements, the income statement, balance sheet, cash flow statements, and the notes to the financial statements. So any knowledgeable investor knows that so if you're looking at Google and they've got a big chunk of goodwill on their balance sheet, you better read the footnote to the goodwill so that you know what's in there, how it got there, how they're measuring it, has it been impaired, all those things. So accounting is more than just the numbers on the financial statements, it's also the notes. And the auditors that review those financial statements review not only the numbers, but they make sure that the notes are providing the additional information.
Yeah. Yeah. The way I look at it, if I went to the bank today and I said, my net worth is $5 trillion, they're going to say, wait a second, let me have my experts look at it. And some experts, accountants, reviewed whatever Trump did, and they said, he's good to go. Here you go. And it was paid back. So I look at it as saying it's got to be checks and balances. And it seems like it worked out well for everybody involved, except for the Democrat Party. That's the way I look at it. I don't know if you agree with that. So that's my only thoughts. But anyways, outside of your...
just so we're clear, no comment.
Yeah, totally understand. Outside of your own book, is there any book that maybe changed your life, maybe put you on this path that you fell in love with early on? Rich Dad, Poor Dad did that for me. Is there anyone that you can recommend to our audience?
Oh gosh, there are so many books. I mean, I have a PhD, so I did a traditional undergraduate program. I went to work in this bank for a few years, then I got a master's degree and got my PhD. So I've read so many things. I think, and I didn't know what the titles are, but the literature that I read in my doctoral program around the important institutions that underpin our economy, that literature and that learning about those disciplines, that really enriched my understanding of the importance of accounting. Because then you understand that, oh, well, these rules matter. And in the case that you just mentioned, right? Yeah, you can say, well, they made the loans and they got the money back, but what price did they pay? It's well documented that they didn't get a fair price. And so when people buy a stock and, and go through all that, and they did it based on inaccurate information or biased information, that affects the price, right? Somebody is harmed by that. So those institutions, the Securities and Exchange Commission, the Fed, the Comptroller of the Currency, the bank regulators, those are all really, really important institutions. And that's really informed the way that I think about accounting.
I will say this is the most popular accounting book that I've seen on Amazon. We've interviewed probably 7, maybe 8 accountants or have accounting books.
Yeah.
And holy smokes, 411 reviews. So this one is by far the most popular. I commend you for that. I think that the more I focus on my numbers, the better I become as an entrepreneur and a leader. So this is a crucial message. Guys, if you're looking to understand this stuff, maybe check out this book. It's really for students, but I think you can still learn something from this. So Terry Warfield, I will say this is maybe we can come back on after we hear if the appellate court if the appeals sticks
Well,
or not.
there's a lot of court cases that are gonna, get resolved one way or the other.
Yeah.
Right.
But anyway, great talk with you. Is there a website or a social media channel that people can find you on?
I don't have one. I mean, I've got a web page here at the university. I'm easy to find. Just Google Warfield at wisconsin.edu. You'll find me.
Yep, and it looks like you have a wild bio, and I could probably spend 15 minutes just reading it. So you've been around the block, you know this stuff really well, and I really appreciate your time today.
Thanks. I appreciate having the conversation.
Guys, remember, $1 million book will lead to $1 million